Good afternoon, great to have your company on Kalkine TV. I'm James Preston and you're watching The Buzzing Trends. Today we're taking a look at Square shareholders and what can be expected following the approval of the Afterpay deal. The $29 billion Afterpay-Square deal overcame a major challenge after the New York Stock Exchange listed US firm Square saw its shareholders back a plan to issue more stock for the deal. The ASX-listed buy now pay later major Afterpay Limited informed the exchange that the US firm's shareholders have given a nod to the issuance plan. It follows the release of a scheme booklet for sharing further details of the deal on Friday. Afterpay shareholders who are expected to vote on the transaction in December will have the option of taking US-listed Square shares or accepting ASX-listed Square shares. The deal will also require the approval of Australian regulatory authorities, including the Foreign Investment Review Board. Afterpay said that Square stockholders have approved the issuance of Square Class A common stock, including the shares underlying CHESS depository interest to Afterpay shareholders, as contemplated by the scheme implementation deed entered into between Square, Lani Sand, Afterpay announced on the 2nd of August 2021. Getting approval for this issuance from Square's shareholders was one of the major conditions of the transaction, which means that Afterpay can now move ahead with other plans. Afterpay expects the transaction to reach an end during the first quarter of 2022. It's the biggest buyout known in the history of Australia. So let's take a look at exactly what the Afterpay-Square deal entails. The record-breaking deal comes as Afterpay, which provides short-term interest-free instalment loans, is facing increasing competition from banking giants including Commonwealth Bank, Citi and payments giant PayPal. After the transaction, Square will integrate Afterpay into two of its existing ecosystems, aimed at strengthening the connection between its seller and Cash App ecosystems and unlocking cross-sell opportunities with Afterpay. Square shares advanced 6.4% in October, while the Afterpay share price only rose 3.8%. Afterpay's shareholders will get 0.375 shares of Square stock for each one they own of the buy now pay later firm. The US firm can also choose to pay 1% of the purchase price with cash. Well, let's take a quick break now, but after these messages, we'll take an in-depth look at the recent performance of both Afterpay and Square, along with a look at the future of the buy now, pay later space. Hi there, James Preston for Kalkine TV. Are you into gaming and virtual reality? Does AI and the endless possibilities it entails capture your interest? Or are you constantly trawling through the web to try and discover the latest updates and innovations in the tech space? Well, let us do the work for you. From the latest product launches to shocking affairs on the World Wide Web, exclusive interviews and information about the top companies like Apple and Google to brand new tech startups vying for your attention. Kalkine's Tech Beat has the latest in what matters in the world of technology. Join me every single Thursday on the Tech Beat, exclusive to Kalkine TV. Thanks for joining us. James with you on Kalkine TV for the Buzzing Trends. This edition focusing squarely on Afterpay and Square. Let's take a look at their performance throughout October. Buy now, pay later providers including Afterpay and Zipco have seen their share prices surge as the pandemic drove rapid growth in online shopping, but the wave of large players entering the sector is expected to put pressure on profit margins. And some analysts expect more corporate deals in the sector. There was no major development from Afterpay's side in October. However, there were developments in the Australian payment space that likely influenced its valuation. The prices of two firms are connected of late due to the nature of the deal involving 0.375 Square shares in exchange for one Afterpay share. Square shares advanced 6.4% in October, while the Afterpay share price rose by 3.8%. The Reserve Bank of Australia's decision to ban no surcharge may have had a negative impact on Afterpay shares in the past month. Also, the current value of Afterpay's takeover by Square, based on the current exchange rates and the latest Square share price of US $252.48, comes up as 127 Aussie dollars and 10 cents per Afterpay share. The purchase by Square, the payments firm of Twitter's co-founder Jack Dorsey, underlined the growing popularity of an industry that has upended traditional consumer credit. The deal is set to be the largest takeover in Australian history. Afterpay co-founders Nick Molnar and Anthony Eisen, who have each become billionaires due to the company's rise, have vowed to continue their involvement at Square and have been given senior executive positions in the post-merger business. The takeover of Afterpay is a sign of the fierce competition for young financial services customers who are increasingly turning away from traditional banks in favour of fintechs. The trend is sparking a major competitive response from the big four banks, with the Commonwealth Bank this week announcing a landmark move into cryptocurrency, as well as going head-to-head with Afterpay by launching its own Buy Now Pay Later product earlier this year. CBA's key rival Westpac, in contrast, has formed a partnership with Afterpay, following the Buy Now Pay Later company to sell deposit accounts to customers, and there are also plans to sell mortgages through the app. Westpac's financial results presentation this week argued it was making progress in the millennial market, pointing to growth in accounts targeted at adults under 30 and a recent revamp of its banking app. It's a very bright looking future for the Buy Now Pay Later space, and at Kalkine we will keep you across every single development. That's all for now though. Stay tuned to Kalkine TV for the latest market updates, business news and exclusive interviews. I'm James Preston, signing off for now.